let's check out Rivian after the earnings report that they just released. Hi everyone, I'm Nick. I've tracked the stock for a long time and I'm going to make some comments, my own trading comments. It's not advice, it's just my own trading comments. But stick around until the end because two things. I'm going to offer you an opportunity to learn more about options, but more importantly, I'm going to tell you what to look for. Like if I'm an investor, there's a really important point that a lot of people are missing, and it's not about sales. So stick around until the end. I'll cover it. The last minute, it'll be that. First of all, in case you don't remember, this came from the stratosphere. During the pandemic, everybody went silly. You know the story. So if I'm invested in the stock and I bought 100 shares and that's all I intended to hold, I don't double down on a company that's still not on a solid footing. More on that in the end. So personally, I don't dollar cost average. I don't average down. I average in, but in order to do that, when I take my initial position, I decide to only take partial position. So if I wanted to own 100 shares, I would only own 50 and wait. Then I can add the next 50 if I lose 30% of my investment. So that's how I would do it. So if I'm in that bucket and I bought 50 shares when I meant to buy 100, then I may consider adding the second 50 here. After you listen to what I have to say at the end, you might want to review that. Okay, so that's the investment part. If I'm long and I got stuck long and I invested all the count I needed to invest before, I wouldn't add a nickel to it because I have a problem, then I would add to my problem. That's not very smart. If you have other opinions, please discuss them in the comments. It's open for everybody. Just keep it clean. And subscribe to the channel. And if you like the content, give us a like so we can do more of it. If you're missing something, tell us about it. We'll add it in. Okay, now what about traders? Traders will have to go into lower time frames, and I'm going to go into a pretty low time. This is pretty good enough for me. The stock has never been lower, so there's no quote support for the long term. You go in on faith and homework. But for the traders, there is support, and it's very ginger. It's basically what happened just this week. So if I'm a quote trader, I can go long the stock hoping for a pop. And I can tell you once they get here, they're going to hit resistance. Why? Because they fought over it on the way down. And then when they hit this level up here, which is in the closer to 16, they're going to hit resistance more. Let's call it resistance plus. So around 1320, first line of resistance, short-term comments, of course. Okay, so this is, quote, the trading opinion. So let me tell you, by the way, there is another way of going long other than buying shares and buying calls. I will have a seminar in April in Dallas, right off the Dallas airport, very convenient. It's going to be 25 people, very, very exclusive, and it's going to cover options from A to Z. If you're a starter, if you're just getting into options, it's necessary, and if you're good with options, this will take you to the next level. It's 2 days. It's fully catered for the 2 days. It's amazing. Again, 25 people. And you will also jump into our Discord from now until the end of April. And that itself has a pretty good value right there. All right, back to my point of contention. Okay, and this is where we talk fundamentals. Let's open up the financials of this company. I'm going to introduce you, if you don't already know, to a line item that freaks me out with this company. Again, I think the sales are awesome. The growth is phenomenal. It's a startup. It's at least producing cars. Look at Lucid, not producing much. So this is a successful selling company, but at what cost? So check this out. This green bar right there is revenue, sales. That's the top line. This is an annual number. And then you get to this number, which is COGS, cost of goods sold. Is it? Yeah. This is the cost of goods sold. So my beef is, speaking of beef, pun intended, let's say these are burgers and my burger is $5. It costs me $7.50 in ingredients, not to mention labor, rent, gas stove, gas expenses, electricity, everything else that goes into building. COGS stands for cost of goods sold. The good is the car, the cost of the goods, the stuff that goes in the car, the tires, the steering wheel, the leather, the plastic, the wires are more than the price of the car, and they're already expensive. So how does this movie end? What is their plan? Because look, the price of the car is, let's say, $80,000. The cost to make it is 110, I'm estimating. And then you have operating expenses, another $3 billion in the hole. What's the path to prosperity? How do you stop bleeding? But interest rates are high. So where are they going to borrow the money? So they might dilute the stock. They might issue debt, convertible debt into stock. So if I'm an owner, I'd be pissed off if they did that, because now suddenly they are cutting up my piece of the pie into smaller pieces to give to everybody else. This is pretty scary stuff. Again, the sales are phenomenal. Look at the growth quarter over quarter. That is impressive. But they're buying it by bleeding themselves dry. So let me switch to Tesla to give you a comparative. So Tesla sales, at least the gross profit is positive and they're making money. I don't like Tesla, but I'm just giving you a comp. And this is a one-to-one comp. So the price of the burger is more than the price in the ingredients, and they're producing it even with profits. That's an amazing box right there, that they're able to pay this much for the stuff and then they assemble it basically with nothing. It's not about loving the car. You can love the car and you can just admire the stock. If my brother was in it, I would say, please don't dollar cost average into this. All right. Hopefully that helps somebody out. I'll talk to you later.